morning everyone. This is Muhammad Sadiq, Faculty Commerce, Telangana Tribal Welfare Residential Degree College, Men Manuguru at Bhadrachalam. Today in this session I am going to talk about bank reconciliation statement. So before going to start the concept of bank reconciliation statement, let me introduce about the cash book. So which is very important to understand the bank reconciliation statement. So cash book is one where we prepare as one of the ledgers or one of the subsidiary books. We have a variety of cash books: a single column cash book, 2-column cash book, and 3-column cash book. Whatever the cash book it may be, we take all the receipts and payments in a cash book. In a single column cash book, we consider only cash column. We take the transactions which are related to cash. When it comes to 2-column cash book, along with the cash column, we add one more column for bank related transactions. Both sides, debit and credit sides, we add bank column in a 2-column cash book. And when it comes to a 3-column cash book, along with cash and bank columns, we also add an additional column for discount. So in cash book, all the receipts will be written debit side, all the payments will be written credit side. When it comes to bank column of a cash book, whether it is a 2-column cash book or a 3-column cash book, all bank related transactions, so the deposits or the receipts will be written debit side of the bank columns cash book. Payments and withdrawals will be recorded credit side of the cash book's bank column. So this is the usual procedure that every trader or businessman follows. Here, then what is the link between cash book and bank reconciliation statement? For the understanding of bank reconciliation statement, we have to consider two books usually: cash book and passbook. Cash book is one which is prepared by the trader or the businessman. Passbook prepared by the banker usually. So the businessman or the trader prepares the cash book by considering all bank related transactions in bank column. After preparation of cash book, after a specified period, the trader or the businessman has to compare the cash book with the bank statement. This is the usual procedure. The bank statement is available with the bank where we have an account of an organization. We can get the bank statement and we can compare the bank statement with the cash book. If there is any differences between cash book and passbook, then the bank reconciliation statement comes to the picture. So there is a need to prepare the bank reconciliation statement where there is a difference between cash book and passbook. So in cash book also we consider only the bank related transactions. So by taking all these points, we prepare bank reconciliation statement. So the very name suggests bank reconciliation statement. It is a statement, not an account. It is a summary. It is a summary of all the transactions, right? All the bank related transactions, right? So to balance the cash book and passbook, we prepare the bank reconciliation statement. So we'll see the definition and meaning of bank reconciliation statement. Then we'll start the session. Yeah. A bank reconciliation statement is a summary of banking and business activity that reconciles an entity's bank account with its financial records. The statement outlines the deposits, withdrawals, and other activities affecting a bank account for a specified period of time. So bank reconciliation statement, as I told earlier, it is a summary. So we prepare the bank reconciliation statement for balancing the cash book and passbook. So whenever there are differences between the cash book and passbook, we have to prepare the bank reconciliation statement. So the debit and credit rules also very important for understanding of bank reconciliation statement. So here we have two books, cash and passbook. So cash book, debit side we take the deposits of checks, credit side any withdrawal from bank we write. Passbook is totally contrary to the cash book. Debit side we write the withdrawals from bank, so usually the banker writes. Passbook credit side it affected with the deposits. So what happens if a transaction recorded in cash book, right? So if a transaction recorded debit side of the cash book, it represents an increase of balance. So wherever we write a transaction debit side of the cash book, it represents an increase of the balance. Same as where we record a transaction credit side of the cash book, it represents the decrease of the balance. When it comes to bank statement or passbook, it is total contrary to the cash book. So the debit transaction represents the decrease of balance and credit transaction represents increase in the balance. So the bank statement prepared by the banker, and as per the demand of the customer it will be supplied. What are the forcing factors for preparation of BRS? So definitely there is a need for preparation of BRS. We'll see the points. To know the actual bank balance of the trader. So usually the trader prepares cash book, but only with the cash book we cannot make a conclusion of bank balance. We have to compare the cash book with the bank statement, then only we can make a conclusion. So to know the actual bank balance of the trader or businessman, we have to prepare the bank reconciliation statement. And point number 2, to detect mistakes recorded in cash book and passbook. So whatever the mistakes recorded in cash book or passbook, so when it comes to a cash book, so mistakes recorded by the accountant, and when it comes to the passbook, the mistakes recorded by the banker can be detected by the preparation of bank reconciliation statement. And point number 3, it prevents frauds and helps to rectify the mistakes. Bank reconciliation statement not only balances the cash book and passbook but also helps in rectifying the mistakes, right? When we compare the cash book and passbook, the trader or the businessman can know whatever the mistakes committed, right? So he can identify, then he can rectify the mistakes. And the point number 4, helps to identify the delays in collection of checks. So usually the traders face this problem. Delay in collection of checks can also be resolved by the preparation of bank reconciliation statement. Checks the accuracy of cash book. So the accuracy of the cash book can also be known by the preparation of bank reconciliation statement. And it also helps to detect the misappropriations of cash, right? If there is any wrong entry or cash is showing less balance, right, we can also find through the preparation of bank reconciliation statements. So these all are the driving forces which are very important to consider while preparing the bank reconciliation statement. And what are the differences between cash book and a bank statement, right? So we have to know the reasons why there is a difference between the cash book and passbook. Here, so you can see the reasons for differences between cash book and passbook. The point number 1, checks deposited but not collected are cleared before the date of reconciliation. as I told you, the reconciliation statement prepared on a specified date after a specified time. Here, so usually what happens, whenever we receive checks from the customers or debtors, we enter the amount of check in the cash book banks column, so usually debit side. So debit side of the cash books bank column, we record that a check has been received and we write the amount. The same check will be sent to the bank. The same check will be sent to the bank for the collection. But in some cases, the checks may be or may not be cleared before the date of reconciliation. Suppose today I am preparing the bank reconciliation statement. Till this date, a check has not been cleared. The check already deposited in bank but not cleared. So then there is a difference between cash book and passbook. What happens? Usually cash book shows the balance, right? The increased balance, but the passbook shows the less balance than cash book. Why there? Why the reason? So we have entered the check amount in cash book only. The check amount not entered in the passbook since the check has not been cleared. So there is a difference between the cash book and passbook. Cash book is showing amount more than bank statement. So bank statement is showing less amount than cash book. There is a difference. So we have to prepare the bank reconciliation statement. So this is the first reason. And reason number 2. Checks issued or drawn but not presented for payment. So whenever checks issued to a supplier or to a creditor, what we usually do? We write credit side of the cash books bank column. Whenever a check issued to the supplier or a creditor, we write credit side of the cash books bank column, and the effect is decrease in the cash book. Cash book balances decreases, but the check is not presented for the payment. So to whom we have issued, the supplier or the creditor has not presented the check for payment. So unless the check has not been received by the banker, there is no effect in the passbook. Again, the cash book is showing less amount, passbook is showing more amount when compared to the cash book. We have entered the issue of check in cash book, but the check is not clear, the check has not been paid, so the passbook is showing or the bank statement is showing amount in the bank account. So there is a difference, then we have to prepare the bank reconciliation statement. And point number 3. So bank charges, commission, insurance premium, interest on OD, other payments made by the bank. So whenever the bank charges, commission, insurance premium, interest on OD and other payments made by the bank as per the standing instructions of a customer, right? So there is a difference between the cash book and passbook. Why? The bank pays bank charges, commission, insurance premium, interest on OD and other payments, not consulting the customer as per his standing instruction. The information will be sent to the customer in due course. So unless the customer knows the details, he will not enter the transaction into the cash book. So for not consulting the customer, already the bank paid the bank charges, commission. So there is a decrease in balance. Passbook has been decreased, but still the cash book is showing the balance. So there is a difference between the cash book and passbook, and there is a need to prepare the bank reconciliation statement. And next point, interest or dividend etc. collected and credited by bank. Bank not only pays the payments but also collects the interest or dividend on behalf of the customer. So the information will be sent to the customer in due course, but until unless the customer knows the information, he will not write the transaction in a cash book. But the bank has an effect. The bank statement has an effect. So whenever interest or dividend received by the banker on behalf of customer, banker writes the credit side of the passbook. There is an increase in balance, but it has not come to the notice of customer or the trader, businessman. He has not entered the amount in the cash book. Cash book is showing less balance compared to the passbook. There is a difference between the cash book and passbook. We have to prepare the bank reconciliation statement. So this is also a factor. The next point, direct payment or deposit into the bank by customers, debtors, agents. So this kind of problem may arise due to miscommunication between the customers, debtors, agents. Instead of paying or instead of sending a check direct to the businessman or the trader, the customer or the debtor may send check direct to the bank. So this is called as direct payment or deposit of a check by the customer or the debtors. Whenever the banker receives a check from a customer or debtors on behalf of the bank's customer, they enter the same in the credit side of the passbook. So there is a increase in passbook. So whenever a check comes to the bank, they usually enter the amount in the passbook of the concerned customer. But the information has not sent to the trader or the businessman immediately. They will tell the information later. But until unless the trader or the businessman knows the information, he will not enter the amount in the cash book. So a check has been received by the bank, not by the trader or the businessman. There is an effect in the bank statement, but there is no effect in the cash book. So there is a difference between cash book and passbook. So then we have to prepare the bank reconciliation statement. Next, dishonor of checks. So what happens usually? We issue a check on the name of a supplier or on the name of a creditor. The same check will be sent to a bank. Then what usually happens, the trader or the businessman enters the check credit side of the cash book. So since it is a payment, so we write credit side of the cash book and there is a decrease of balance. The check has been sent to the bank, but the check has not been cleared. The check is dishonored. So due to any other reason, then the check is not entered in the passbook but entered in only cash book. Cash book is showing less balance when compared to the passbook. So we have deducted the amount in cash book, but the amount has not been deducted in passbook. So the cash book and passbook are showing different balances. Then we have to prepare the bank reconciliation statement. So this is also a reason why there is a difference between cash book and passbook. And next point, checks entered in cash book but failed to deposit in bank, right? So here what happened, checks entered in cash book but failed to deposit in bank. So we have received a check, from a customer or from a debtor. We have entered the same in cash book, debit side of the cash book's bank column. There is a effect. The cash book has been increased by adding the amount, but we have not sent the check immediately to the bank. So unless, right, we are not sending the check into the bank, there is no effect in the bank statement. There is a effect in the cash book, but there is no effect in the bank statement. So whenever we write the check in cash book as a deposit, it has been sent to the bank for collection, but we have not sent. We have failed to deposit the check into a bank. The cash book is showing more amount compared to the passbook, since the check only entered in cash book but not sent to the bank for collection. So what happens? Due to this reason also, cash book and passbook, so they show different balances. So to reconcile the cash book and passbook, we have to prepare the bank reconciliation statement. And next point, discounted bills dishonored. So it is a usual practice as a being business concern. The business concerns usually they discounts the bills and they send to the bank for collection. But what happens if the bills are dishonored in bank? So the information has not been known by the trader or businessman. So definitely a problem arises. Difference comes between the cash book and passbook. So to rectify this, we have to prepare the bank reconciliation statement. And next point, wrong entries in cash book. Wrong entries in cash book. So this is also a problem. So whenever there is a wrong entry in cash book, so there is a difference between cash book and passbook. What happens if there is any clerical error or oversighting, or by mistake we are adding the amount double or twice, or we are not entering an amount into the cash book, we are ignoring a transaction in writing cash book, right? So what happens? The difference arises between the cash book and passbook. So again we have to prepare the reconciliation statement to rectify this error. So then the next point is wrong entries in passbook. So this is also a major problem. So whenever the entries made by the banker in passbook wrongly, so definitely the cash book and passbook shows the different balances. So if the commission entered twice, or the totaling is doubled, or wrongly the banker has been totaled, so the differences arises between the cash book and passbook. So we have to prepare the bank reconciliation statement. So after carefully examining all these points, we can conclude whenever there is a difference between the cash book and passbook, we have to prepare the bank reconciliation statement to balance these both. So I hope it is clear. So I am going to conclude the class. So thank you very much.